All right, so we're going to get back into acting and finance. And today we're going to be talking a little bit more, or I guess less structured, because I just kind of want to talk about what this whole vision is and what it is I want to do with it. Um, so we're going to get into it. So it's called Acting AF, right? Acting and Finance. Of course, AF is a moniker for something else, which is why I used it. But the point of this whole thing is to just educate specifically artists. I've talked about this before, but it's to educate artists on finance because if you don't feed the artistic spirit, it does eat at your soul. Okay. If you don't have the finances, if you don't have the ability to do what you want to do, it does start to wither away. And I know this from experience because I lived it. I did it. I had a whole corporate career, 11 years, before I started acting. And in that time, here's the full breakdown of the resume. I was 19. I got my first job as a picture portrait package salesman for this company through my church. And I would go to Fry's and I would be standing there at this kiosk and be like, "You get a picture package, sir," and I would try to sell a little picture package and set up a time and a place and an appointment for a photographer to take family photos or whatever. Well, I didn't make very much money there. There was one week where I put in 50 hours and I made $12. I was horrible at sales in that way. And at that time, um, didn't really believe in the product because I just didn't. And I didn't like the price. There's a lot that went into it. I left that job and I started working at FAFSA, which is the free application for federal student aid. And I was there for about, I believe, a year or something like that, 6 months to a year. And I was a seasonal employee. I was there for a while helping people with their college, the applications who want to go to college to get financial aid, whether it was a federal student loan or whether it was a Pell Grant or something like that. Got laid off, season ended, and then I started working for Medicare. And I was a Medicare claims representative for a few years. And then when I was about to be 23 years old, and I jumped from working at Medicare to working at USAA as an automobile claims representative in this thing called the Initial Reporting Unit, IRU. That's not called that anymore, I don't believe, but um, the IRU would, if you got into a car accident, if somebody broke into your house, if your house caught on fire, I was the guy you would talk to start that claims reporting process for you to get your paycheck, whether it's for your car or for your house. Or in some cases, if you caused damage to somebody else's house or somebody else's property while you were out in public. For example, most people don't know this, but if you have a renter's policy or a homeowner's insurance policy and you damage somebody's property out when you're out and about, they can sue your policy for liability. And that's what they would sue. Under your homeowners, it'd be homeowners liability insurance. Under renters, it'd be renters liability insurance. These are just all things that go on. So I was a initial reporting unit, and then I was promoted to a claims automobile adjuster level 3, because they did 3, 2, 1. And then I was an adjuster. So I actually was able to make, liability decisions, who was at fault in this accident, etc. And then I was like, you know what? I'm tired of talking to angry people all the time. I want to become a salesman for insurance and banking here at USAA because I want to learn more about finance, yes. But I'm just really tired of being yelled at all the time, but people asking me, where's my check? Where's my money? So I left the claims department and I moved over to the banking and insurance sales department. It's called Banking and Insurance Solutions. And I would open up checking and savings and credit cards, and I would open up property and casualty policies, homeowners insurance, renters insurance, and VPP, valuable personal property policies. I was there for a little bit, a year and a half, and I was like, you know what? I want to learn even more about finance. I've always been interested in the stock market. Let me learn a little bit more. So I applied for and was accepted into the stockbroker program at USAA. In order for you to become a Series 7 registered representative, which is what it's called, you're not really called a stockbroker according to according to most people in the industry, the Financial Industry Regulatory Authority, or FINRA, calls you a registered representative. And to take that test, get that license, you have to be sponsored by an investment firm. So USAA Brokerage Department sponsored me to take that test, passed it, and I was now a stockbroker. I also took my Series 63 exam and I passed that as well. But the Series 7 is really what you're needed to be called a stockbroker by anyone. So I did that, and I was there for almost 5 years, and then my department was sold to Charles Schwab in the middle of the pandemic. May of 2020 is when I was laid off. I was given a very nice severance package, and I jumped into acting and kept applying for other jobs. Since that time, I put in over 3,000 job applications. I already have my bachelor's degree, and I wasn't able to find a job. Nobody was, right? It was COVID. Everything was shut down. So I was like, acting is the way to go. So I started really jumping into acting. And then I was like, but you know what? Acting is feast or famine. Like most artist things, it's feast or famine. So I started working as a mortgage officer at Rocket Mortgage, and I was there for a year. And that was just not a great spot for me. Very, very long hours expected of you. And the pay was, well, it wasn't great. There was a class action lawsuit that they lost. And I got a paycheck from that, small one, but still got one because the pay was so skewed there. Other people who didn't have my exceptions got much, much more, but I had some exceptions. So, I still got paid, but it was a crazy thing. My whole point in all of this is this is my whole corporate career. Everything I'm telling you about is stuff I've learned from experience. Like when I'm talking to you about how, most young people that join the military, for example, most times whenever you sign on with the Army, or the Air Force, you're given a signing bonus. You sign on to the military. Here's your signing bonus. You're supposed to take that bonus and you're supposed to go and buy your uniform, everything you're going to need for basic training, whatever else you might need. They give you a list of everything you need. Some of the clients or the members I would speak to when I was working at USAA, for example, they would take that money and go and get a brand new Camaro. Cool if you already had savings, but if you're 18, you probably don't have a savings account built up that much unless your parents did it for you. So they would go buy this, and then months would go by, or years sometimes, and they would then be calling us because they need to get rid of it because they can't afford it. It's just how it goes. You're not paid very much when you're an E1 or an E2. So everything I'm speaking about is from experience, the things I've learned, things I've lived through, and I'm giving it to you now as an artist myself who understands the struggles of the art world. Not all of them. I'm sure there's some I haven't come across yet, but I do know that most artists will have to either work another job to supplement their artistry, or they'll have to open up a business, be an entrepreneur, and offer some other good or service. If you do, by the way, please send me a message. Please put it in the comments below. I would love to shout out your company, what it is you do, because I think that's the only way that we can really grow and help each other is by sometimes just saying it, just speaking it out there. Will be enough to get some eyes on it and get some attention for both parties. So if you have a company, if you have a business, if you're a locally owned or family owned thing, whatever it is, just let me know. I'd love to shout you out. So all of this comes from experience. That's where I'm going with this. So, most artists, you start off doing stuff for free. I did. My first acting gig ever, I was paid with a grilled cheese sandwich. And I was like, oh man, I guess this is how you get started. I was clueless about everything because I wasn't allowed to watch movies and TV growing up. So I had no idea about the industry or pop culture references. A lot of them still go over my head. I just haven't caught up. I feel like Captain America from that one scene, where he's like, I got a list trying to catch up. So you're going to be doing stuff for free and you need to have some way to supplement your income, there's no shame in that, right? There are countless stories of artists who have had to live in their car, have had to do different things so they can make ends meet while they're chasing the dream. How long have I been talking? Okay. Sorry, I had to check my timer. That's cool. Everything I'm teaching you is so you just understand, okay, hey, I talk a lot about income, for example, and I want you to have income that comes to you every month, regardless of market fluctuations. But income is not the only investment tool that's out there. And it's not the only way to make money. I will talk to you about all of them over the course of however long I do these videos. But I want to just make sure that I arm you with as much knowledge and information as you need to make some money. I'm going to drop some information for you here. So for example, if you have a major bank, and I use this example all the time because it's numbers and people need numbers for it to make sense. So for example, a major bank will pay you on a savings account 0.01%. That is 1 penny for every $100 you have saved. And they pay that on an average percentage or annual percentage yield. So they take the average of how much money you've held in that savings account for the entire year, and they pay you 0.01% of that at the end of the year, or whatever your payment period is. It might be once a quarter, whatever. But you can always look this up or call them and they'll tell you. But so basically what that means is this. Let's say you have $100,000. It's a very silly example. You have $100,000 in your savings account in January. And then you pull it all out so you can buy a house in February. And so for the rest of the year, you have nothing in your savings account because you took all of it and you put it towards a home purchase. You will get some money from your big bank like Chase or Bank of America or Wells Fargo for January, February. But then they average it out over the year for the entire 12 months. And that's what you're actually paid the 0.01% on. So 100,000 divided by, they take 100,000 plus whatever you had in there in February up until you pulled it out. And then they 0.0000000 divided by the average. That's what you actually pay your APY on. That's how it goes. Banks will also offer you a CD. Okay. They want you to give them your money so they can loan out your money to make an interest payment on the money that you deposit. And they will pay you a higher percentage yield, but only if you hold the money in that account for the entire term to maturity. That is because they want to have as much time with your money so they can make as much money as possible and then give you, 4% or 5% or 6%, whatever it is that they have for you. And that percentage always fluctuates based on how much time you have it in the CD. Typically, the longer you have it in the CD, the more they're expected to return, which is because they have more time with your money, so they have more time to make that money with you, with your money. And then you have stocks, right? Bonds, ETFs, mutual funds, cryptocurrencies, etc. So I talked to you about the way the banks kind of where you work to make money off of your money and pay you a very, very, very small percentage, which because again, I've said it before, they're in the business of making money. That's what they're going to do. And you have to think of it the same way that a bank does. You have to think about your finances the same way a business does. Okay. I have this amount of finite resources. How can I put this resource to work so it comes out and it gets me more money and then it comes back with that? Okay. Whether it's on, again, a monthly, quarterly, semi-annual, or annual basis, whether it's you put it in and then you later on you sell it and you take the capital that way, that's fine. You just have to have a strategy. And this is what banks do. Okay. It's something that you can learn, that you should learn to do as an artist, because you're going to get these acting jobs, these artistry jobs. And I don't know about like musicians. I don't know how those will get paid. But as an actor, okay, if I go and perform on a set for this commercial or this film, I may not see that paycheck for 60 to 90 days. Okay. That's just the way it goes. Production gets paid by the client pays the production pays casting director, or the agents, the managers, however they split it up. And then you as the actor finally get your paycheck. Production crews typically get paid before actors do, before talent does, for example. That's how it goes. They're needed for production, so they get paid faster. Talent, yeah, you're needed for production too, but we are on the lower part of the totem pole in most cases until you become like a named actor and you have like an agent and a lawyer like fighting for you, and then you're probably gonna get paid a little quicker. But for most of us starting out, you're gonna get paid every 60 or 90 days after you shoot. Just the way it goes. When that's happening, even if you are booking consistently 5 times a month, you still have to wait 2 to 3 months to get that. So what can you do, right? There is a book called The Richest Man in Babylon. The Richest Man in Babylon talks about setting aside 10% of the income that you make and paying yourself. Okay. What that means is do not take that 10% and putting in savings. You can take 1% of that 10% and putting in savings if you want to. And we've already talked about how savings doesn't pay you very much. Take that 10% and invest it in something that's going to give you a return, either on a recurring basis or at a certain point in the future, like whenever you sell it. But you should be setting aside a certain amount of money every paycheck. It doesn't matter if you're an actor and the amounts fluctuate. It doesn't matter if you are working a corporate gig. Anytime you get paid, a certain amount of what you get paid should go to you, to money that you don't touch, because that's your money. You're paying yourself for doing the work. It's kind of like Snoop Dogg, right? Snoop Dogg says, I want to thank me for putting in the hard hours. I want to thank me for working hard. I want to thank me for not giving up. You got to pay you for showing up to that job and working it when you know you didn't really want to do it. You did it because you had to do it. You got to pay you for keeping your acting dream or your artist dream alive. Pay yourself for doing the things that you have to do so you can do what you want to do. Take a percentage of your income. It doesn't have to be 10%. In the Richest Man in Babylon book, he recommends 10%. But set something aside and pay yourself every time you get paid. I promise you, it's a game changer. It'll work. You will thank me for it later.